Hi, I'm Vicki Suter with Suter Business Builders, and I help contractors build more profitable businesses, find more time in their day, and reclaim the joy in what they do again. And in this time of this interesting turn of events that we find ourselves in right now, I have been really looking for how do I support you as a contractor and as a business owner in understanding what are some of the things that you want to pay attention to and look at with regards to your numbers and the financial impact of what's happening. And I've been spending a lot of time in this last couple of weeks with clients talking about how do you look at where you are today and be able to do some looking to the future to understand what's the implications and what's the financial impact of what's going on and when you're stopped from working, or you've got, what do you do with your team and how do you manage that process with them? And as the feds came out with this stimulus package this week to help people in getting past this hump and the opportunity to be able to borrow money from the SBA, part of it for being able to reimburse you for, to be able to lend you money to keep your employees working, but also to lend you money for working capital. One of the things as I started to look at the package is that what I was reminded of is that oftentimes what I see is that people struggle with knowing how much they should actually borrow, or they don't really struggle with it. Sometimes what really happens is they think, well, it's a certain amount of money, or I should borrow this much, or this is how much I think they'll give me, or this is how much I think I can get, without having really solid numbers behind knowing how much you really should borrow. And so remembering that when all this came out this week, I thought, wow, I think it would be really great to do a webinar to show you how do you actually calculate this for yourself, so that when you're going to make this, apply for this loan with the SBA, first of all, understanding what that amount should be, but then also how do you want to think about and treat that money when you get it. And my friend and client, Dan, was so gracious as to be willing to let me use him sort of as a guinea pig in all of this to share with you what I walked him through and kind of walking him through in this webinar, his numbers and how he can approach this in his business. But also what I'm going to share with you and what we're going to walk through are sort of the steps, and I'm going to give you the steps that you'll want to walk through in determining what that amount is for you and your business. A few little mechanical things like housekeeping things. Dorotha, my coworker, is going to be tracking all the chat comments or questions. So if you have questions as we're going along, please type them in the chat. Dorotha will make sure to capture those, and then I'm going to leave some time at the end to do Q&A, where I'll answer your questions, or Dan will answer your questions. And then also, I'm happy to stay past the half an hour mark. I said we would do this in a half an hour, but I'm happy to stay longer and answer any questions that you have to support you as you take this information forward. Okay, so first of all, Dan, thank you so much for being willing to do this with me.
Happy to be here, Vicki.
Yay. So here's what we're going to do. I'm going to share my screen, and I'm going to walk you through what are the steps that we're going to talk about today. What are the steps to actually doing a plan for how much do I need to borrow? So one of the first things is you want to identify how much do you need to borrow. And here's what when I approached Dan, I said, so here's the thing is I need some basic information from you. So you're going to want to compile some information, and I'll walk you through each of these steps. But one of them is, what does it cost me for my employees? What does it cost me for 8 weeks of payroll? What does it cost me to run my business, right? If I've got no income coming in or very minimal income coming in, how much does it cost me to run my business? What's the potential loss that I could be facing? And then so I'm going to show you both of those that Dan did before we actually began talking. And then we did a cash flow summary. And then the fourth step was to identify the potential amount that he needed to borrow. So we'll walk through each of those, and then the next actions after this, and we'll talk about this more towards the end, is, well, now that you figured out what that number is, what are some other things that you really want to take into consideration right now in terms of your numbers and dollars and cents, and how to manage having this money effectively. And one thing I'm going to just say is that, so I'll walk you through, I'm pulling these over from my other screen. One of the things, and Dan and I were talking about this a little while ago, is one of the things that happens when you are clear about your numbers, you will have a much greater degree of confidence in your ability to make decisions. And Dan was even saying this before, right? I mean, it's like the thing of, when you have clarity, you have a greater sense of confidence. When you have more confidence, you can take more powerful actions. And so the whole thing of, that I want you to keep in mind, and this recording is going to be available to you afterwards and so on, and you can, go through and follow the steps. But if there was one theme and one message in all of this, it would be like, know your numbers, like lean into getting comfortable with your numbers. Because I know for me that when I don't know what my numbers are, when I see, even in just this time, like I had to really stop in the last week and go, okay, where am I financially, and what's some potential scenarios of how this could play out for me and my business, and for my husband and I, and our, and our family, like what's that going to look like? And I noticed that I had a high degree of angst and like just crankiness about the whole like not knowing thing. And then we sat down this week and we went through all of the numbers and we projected out over the next couple of months. And what I noticed is that as soon as we looked at that, and we looked at worst case and best case scenarios, but even at the worst case, when numbers didn't look well, I was like, well, at least I know where I stand. So the whole thing about having clarity about your numbers at least lets you have clarity, even if it's not the numbers that you want to see, even if it doesn't paint the best picture. The more clear it is for you, the less angst you'll have, the more you'll be able to make decisions from a powerful place. Dan, would you agree to that, about that? Because I know you and I were talking about that earlier.
Yeah, I was telling Vicki that knowing my numbers means that, we have clients, they might call up and say, hey, Dan, I got 2 other bids and you're the high guy. If you could come up and do this for this price, it's your job. That's what the average is. And knowing that, I don't know, it's nice that they want me that bad, but I need to still do run my numbers. If it could be that I'll lose money. I don't have the same cost as those other people. I don't have the same employees. They don't have my overhead. So it's just made us make better business decisions on taking jobs and not taking jobs. But also, for me now, knowing something, I can make decisions today based on my projections for 3 to 6 months out. And and going through these kind of numbers, I would think if you projected it out and said, oh, I'm not going to make it, at least you know now, instead of spending all the reserves you have till you get to that point, and it could help you make a better decision of how you get out.
Yeah. Yep. Absolutely. Yeah. Thank you. Yep. I'm going to go back to sharing my screen. Thanks, Dan. Yeah. So what are the steps? So the first thing that I said to Dan is, let's go compile some projections based on what you see. Like, so for us in California, we got shut down in the middle of March. So March was a lower number, like cut in half from what it normally would have been. And then I said, what are you projecting? Because they can still do some work that keeps, social distancing of 6 feet and all that kind of stuff. I said, what do you have as potential work that you could do? And so he gave me those numbers. And we calculated, all right, so what is it gonna, what does that translate to in terms of gross profit dollars? And then what's it gonna cost you to run your business? So they compiled these numbers and basically pulled this information from the profit and loss statement for January and February to look at what is our real cost. Now, a couple tips for you if you're listening is, here we are, and it's April 1st. So I recommend that you look at try to get all your information updated. They did this pretty much before we looked at this yesterday. He and his office manager updated these numbers so that we had the most up-to-date information. So that will really help you. So we did that scenario and we said, okay, with March being about half the amount of revenue April being 50,000, May being 60,000 in revenue. Then we looked all the way down to the bottom line, and what that translated to was a loss of 113,600. So that gave us a starting point to go, okay, what is that loss going to look like based on if we keep operations exactly as they are and we have a certain amount of people working, and that's not obviously a full crew, right, when we look at gross labor. And then I said, let's look at a worst case scenario of you can't work at all in April and May. Like I just got an email from another client this morning who had plans to work for April, and they had projects that they were working on, and she just sent me an email this morning saying the entire project is shut down. My project's I'm not working at all. So now she has a different scenario. So you'll want to, as you're looking at this for yourself, just as Dan and I did, you want to put in some numbers and just look at what's the potential scenario. If I have no revenue, if I have some revenue, what does that look like at the bottom line? So for Dan, it was $150,000 loss if there's no revenue. So this was kind of our starting point for being able to identify, so how much do I need to borrow? And so this was step number one. Then we went to step number two. In step number two, I said, what is the cost of payroll for 2 weeks? So this is going to be the next step that you're going to want to go through, is to look at what is the gross wages for 2 weeks, and for both your field employees at the level that you have it, and then your office staff, and what is that? And then we came up with a total. So this is, and we actually did, I'm sorry, not 2 weeks, 2 months. We did 2 months worth, so it's 8 weeks. And then we also identified what is 1 month's worth of payroll, just so that he could see what those numbers are. And we separated them out for field. I asked Dan to separate it out for field and office, because for field, some of that has the potential of being billed in April and May. And so if I'm looking at how much I'm going to, I said, if you're going to look for how much you're going to borrow from the SBA, that they're going to forgive a certain amount of a loan to pay payroll to your employees, they're only going to pay the differential for however much you weren't able to actually have them be working and billable. They're only going to want to cover the difference in that amount. So that's why I wanted to split out field from labor. So that was the second step we went through. And then the third step was to do this cash summary. So doing this cash summary, what did this do? Well, I took the balance sheet, looked over here, and we looked at the balance sheet, and we said, and we looked at just a few kind of key numbers. The first thing we looked at is, okay, how much money do you have in the bank that you're starting with? Because this is an important number to look at when we're looking at what are you going to need and actually to borrow. So that number on here was $254,000. Make this other side by side. And then the second number that we looked at is how much do you have outstanding in receivables? So what's on the balance sheet is almost 173,000. So Dan, let me ask you a quick question here. This outstanding receivable, is this all collectible, or is some of this actually potentially not collectible?
I think it's all collectible. Our receivables have been running very well because, until the beginning of the month, life was pretty darn good.
What's your average? So when you say it's running pretty well, how long does it take to collect receivables?
I say about half of our receivables were paid within a week of them getting their invoice. The other half has been taking 30 to 40 days.
Okay, good. Those are both pretty good numbers. So within about 40 days, within like a week, you're going to collect half of that. And then within 2 weeks, within a month or 40 days, you're going to collect all of it. So the reason I asked you that question of Dan is we want to make sure that when you're looking at this receivable number, if you have numbers on here that I'm not going to collect it. Like I did this the other day with somebody, and I was like, we determined that there was probably, 50,000 that wasn't going to come in because of an issue on a project. I'm like, okay, well, let's take the 50,000 out of the equation because that's not going to convert to cash. So the question we're answering in step number 3 is that going to convert to cash? So I go, if it's 40 days, and I know 40 days out that I'm gonna get all that money, Dan's gonna get all that money, that's cool, then we're gonna leave that whole amount in there.
Yeah,
And then
the caveat is, this is just my supposition based on thinking about life back in 2008 or something, is that out of that 172, 70 to 100,000 might go to 90 days or 120 days.
So, right. So that's a good thing to good point to keep in mind, right, Dan? So it may be that some of that money ends up taking longer to collect. And one thing I'll say is that, and Dan and I talked about this yesterday, and like I've been saying to everybody, like you want to be all over your receivables and making sure to collect them. That's like one of the most important things that you can be doing right now. So stay on top of it, making phone calls, going above and beyond what you normally have done to collect receivables. You really want to be on top of that right now with your clients. So the next number that we looked at, so if that's, cash in the bank, receivables convert to cash, that has a potential of cash of 428,000, or 27,655. And then the next number we pulled is from the balance sheet is the current liabilities. So this is, what is current liabilities by definition is anything that's convertible to cash within the next, due to be paid out within the next 12 months. So that includes in here loan payments for the next 12 months of, 74,000. It includes, accounts payable, includes credit cards, that kind of stuff. So the total from here was 148,000. So we subtracted that number from here. And again, this is probably a little bit conservative, but we're just sort of doing a big swath on this to know what could convert to cash within the short term, within the next 3 or 6 months. And then we calculated the net. So the net of that is 279,000. And then I subtracted from that number the projected loss of 113,000, which left cash of 165. Now, one of the things that in this projection worksheet, let me pull that back up. Remember I said I had the not great case of $113,000 loss. And then I had a worst case, no work in April and May, of 150,000. Now, depending on where you are in the country and you're listening to this, you might be thinking to yourself, oh my gosh, why is she projecting out that far? Because I think it's smart, because 2.5 weeks ago when they told us in California that we were had a stay in place order, that they said it was going to be till April 6th. We all just know that on Monday that went to May 1st, or actually here in California went to May 5th. Arizona just yesterday got the order, the stay in place order. This is it's evolving. And so what I would recommend is that, I think best case is going to be by the 1st of May, we're going to be able to kind of gear up to go back to work. But as you're looking at this and doing this, I think you want to do a worst case scenario so that you can stay in front of this with a plan, and even just so that you borrow the money that you're potentially going to need, so that you're not going back to borrow more money, and so that you're putting in place a contingency plan for the worst case scenario. So when I looked at this for the purpose of this cash flow, I went, let's just assume that you can keep people working at 113. That's going to give you cash of 165. If I put in here minus 150,000, then that becomes 129 as opposed to 165. So I had to absorb more loss. Dan will have to absorb more loss if he doesn't have any work in April and May. So that was the third step. And I will say that everything, I'll share, I did a webinar last week about this, and I shared this template, but I'm happy to share this template, this cash flow template that I'm showing, this cash summary template that I'm showing. with you, and I'll send it out in an email with a link to this this week. So you'll get that. So that's a, just one tool, right? So what have we talked about so far? The first step was get an idea of how much you're going to be, what your real costs are, right? Do some projecting out for the next couple of months so that you can see what that potential loss is. The next thing that you want to do is to know how much your payroll is, right? So I said we want to calculate what this payroll is for the field and the office so that you have that information clearly in hand. And then the third step I said is do this cash summary so that you know how much potential cash you have that will help absorb some of what the losses are that you may incur. And then the fourth step is this. So in this fourth step, here's what we did. I said, so let's talk about not great case and worst case. Not great case, remember, is Dan, you were going to have 50 to 60,000 in billable time for April and May consecutively. Worst case is you don't have any billable time for April and May, but you're paying 100% of the wages. Now this is where we're starting to get into, all right, I'm going to go borrow money from the SBA. How much do I want to borrow? Well, the whole intent behind this relief program is the federal government says we want to keep your employees working. We want it, well, the intent is, it's not that we want to keep them working, we want to keep them on payroll. We want to make sure that they are compensated and they are paid their payroll that they normally would, so that people are not, like, we don't go into this deep dive depression, and that people aren't making enough money to pay their mortgages and rent and buy groceries and all that, pay for their doctor visits. So the idea is the government said, we're going to lend you this money. And by the way, I'm not trying to be an expert or tell you how the letter of the law is about this program. I'm going to kind of just speak big swath here. They said, we're going to lend you money to pay for your payroll for 8 weeks. And we're going to pay for payroll, we're going to pay for rent or mortgage payments, and we'll pay for your loan payments. And we will lend you the money for that chunk, for that 8 weeks of payroll, 8 weeks of your rent, 8 weeks of your utilities, and 8 weeks of your loan payments. We'll lend you that money, and then we will forgive that loan. And then we will also have these other loan programs where we will lend you money at a 3.75% interest rate over, and I think the term might be 3 years. That again, you'll have to look at the details of it. I'm not an expert in the program.
What I saw yesterday was 30.
What was 30?
The information I saw was that you could borrow, and again, I'm not an expert, but the numbers I saw were you could borrow at 3.75 under one program and the term would be a 30-year loan.
Oh, a 30-year loan. Wow. Okay. That's way longer than I thought. Thank you, Dan. Thanks. That's great to know. So you might have so there's what's the potential money I would borrow from the SBA that would be forgiven? And what's the potential money I want to borrow from the SBA to accommodate for what might be a loss in my business, to accommodate for float between the time that it's going to take me to actually collect money from clients. And as you'll see as I walk through this, the other thing that Dan and I talked about yesterday is like, okay, well, there's ramp up time too, because when all this, when you can get back to work, you're going to be spending money on payroll and employees and materials and all these other things. You're going to have costs to run your business to ramp back up that you're going to have to pay out before you can bill a dime. And this is the number that a lot of people miss in this equation. So let me walk you through what Dan and I talked about. We started with, so we have this 3 months, March to May. We've got the conservative, he's working a little bit, and then the worst case, not working at all. So that's the difference between a loss of 113 and 150. And then I said, so if you have all of your field labor working, the total cost for your field labor working is $173,000. If they're working some, And that the amount that they would be working would be 57,000. Then the difference between those two is 116,000 or 115,694. If they're not working at all, the total hit for paying for their payroll would be 173,000. That's how much just for field labor that I would need. And included in this loss number is all of the overhead number. So that includes all of the overhead labor. So I've already accounted for that. And then I've got loan payments in here. So I said, what's your total loan payments for 3 months? And then I've got net total loss from above. So there's 241,000 on the best of the worst cases, and 335,000 on the worst of the worst case. But then Dan's got some cash, right? So he's got either 165 or 299 potential cash. So the net of that is that he would need there's a potential shortage of either 76,000 or 206,000. So you see how, like, when I look at it, what we're looking at here is a loss of 113 or a loss of 150. But when I start to add back in paying field labor, then, and also looking at how much I'm going to need to cover the loan payments, then this is really what my cash shortage will be, even after Dan's cash shortage will be, even after he takes into account the amount of money that he's going to get from his business. So then what does he borrow? So Dan, so we came up with this number, field labor for 8 weeks. Remember our net number up here, this 115. So this assumes this is the difference between what he is getting for his field labor when they are working, and what the total, if he paid everybody, even the people who are not working, it'd be 115,000. If nobody's working, it's 100 and, well, I put the exact number in here, but let's just use, for the sake of consistency, right, we'll use 173,000. So then so on this section, all I'm looking at is, what is the SBA going to be in forgivable debt and what's non-forgivable debt? So if I look at it and I go, well, I got payroll for the field, and I got payroll for the office. That's 73,000. I've got rent for 2 months. I've got utilities for 2 months. I got loan payments for 2 months. So if I look at worst case scenario, that's 267,000. Slightly less than worst case scenario, 210,000. Still haven't taken into account cash though. Now, let's look at what happens in the month of June. So for you, Dan, you and I talked about, all right, so what's your backlog of work? So one of the things that we looked at is when we did these projections, one of the questions I asked Dan was, hey, how much is your backlog right now? How much do you have in backlog? By definition is, what do you have in signed work that hasn't happened yet? Well, it's 376,000. So I'm like, that work is going to, like, those people are going to want to keep moving forward with that work. So when you have to ramp up, let's say it's the 1st of June, even if you used May, right? When you have to ramp up, there's going to be, like, you're going to have to pay for all that labor to do that work, and you're going to have to pay for your business to be running in order to be able to be available to do the work to, get your business running. So when we looked at that, we went, well, direct labor for June is going to be, that's just 1 month, is 86,000. So this is 8 weeks, right? So this is 2 months. 1 month is 86,000. So I got 86,000 of labor for June. And then he's got overhead expenses of 66,000 to run his business. That means really what he's going to need for ramp up cost is, for the month, is 152,000. Why? Because this is the thing that you got to understand, right? You've got this, if I'm assuming that I'm going to have collected all the money that is due me, and I had a certain amount of money in the bank, over these next 2 months, Dan's going to burn up all of his cash. But then he's going to have this ramp up cost that you got to ask the question, where's that money going to come from? So this is why, this is one of the pieces that when you're looking at adding more money to the equation, I said, really, Dan, you want to add 152,000 in here for ramp-up costs. So now we have a total of 362,419. But remember, I've got a certain amount of cash. So now when I take into account what's going to translate to cash, then I've got net borrowing need of 196,000 or 290. If Dan has no work for April, May, then it's going to be 290,000. Now, some of that's going to be in forgivable debt. This portion is forgivable debt. This portion, the difference between these two numbers, then he'll be okay cash flow wise, right? So if this is what the ending cash is, if this is how much the SBA says and the federal government, this program says, listen, we'll cover your payroll for 8 weeks and we'll forgive that debt. Then if I go, okay, then you're going to forgive that debt, then if my net cash is going to be 196, but you're going to give me 210, then I'm going to be in the positive 13,000. Dan's going to be in the positive 13,000. And then if there's no work, it's going to be 23,000 in the hole. So the thing to look at is that you may want to be borrowing, you want to look at, well, what amount am I going to get that's forgivable, but what amount am I going to get that's not forgivable, that I'm really just borrowing money for, and how much is that I'd actually need to do. Now for Dan, like as I look at this, given the cash flow, you may not need to borrow really much more money if you can reduce some of these overhead expenses, right? And we haven't talked about that at all, but one of the things that you're going to want to do, Dan, is relook at, right? So if I come over here, and I know you said this yesterday, you know, it's like, look down here and go, how much money do we need to be, you know, and I've collapsed a bunch of these lines just so that you can see like sort of the numbers. But one of the things Dan and I talked about yesterday is like, you know, to go down here and look and go, where can you reduce expenses? Where can you renegotiate costs of certain things? Where can you renegotiate debt? Defer loan payments? Can you, are there places to reduce these costs so that you don't have to have a huge amount of money out of pocket month to month while you have no income coming in? So you can kind of see based on this, it's like, what are some of the things that you want to take into consideration? And I'm just going to summarize this because I know we're running a little bit over. So, and then I'm going to open it up for questions. And Dan, I'm going to open it up for questions from you first. But the amount projected for losses is the first thing that we did, right? And then we looked at, all right, so when it comes to borrowing, how much would I have to borrow if I have some of my team working and some of them not? That's part of the forgivable debt. So and you want to really start to separate those two out, because the amount on here that we came up with down here is anywhere between 210,000 and 267,000. That's the potential amount that Dan has that could be borrowed from the SBA that's potentially forgivable debt. But then he's going to need to keep ramped up for the cost of going into the month of June, right? But then I've also got, he's got losses that he has to fund here too. So then when I look at the losses, I go, well, I've got anywhere between 76,000 losses in cash flow, 113,000 and 150,000. So then if that's down here and I go, well, but I've got losses here, now I'm going, well, this actually might be how much Dan needs to borrow. And this would be net borrowing above the forgivable debt. So that's a really different number than what we were originally looking at here, right? So this is potential without the losses. This is the losses, March to May. So as you're doing this for yourself, what you want to look at, if you can do these numbers, and again, I'm happy to share this spreadsheet with you. But as you start to do this, you're going to start to notice that, well, what looked like, well, I'll have plenty of money, really isn't plenty of money. This is really where you want to start to think about, I'm going to have to borrow some more. Dan, do you have any questions on this? Because I'm going to talk about sort of that summary sheet that we talked about next actions here in a second. But do you have any questions about this? Like, this makes sense to you?
Oh, it makes total sense to me. I guess my only comment is that as we went through and looked, I mean, Ross Painting went through and started checking out what actions do we need, and this money sounds great and everything. And the money is great. I mean, it's a wonderful thing. I came to the conclusion for myself that we're going to slash expenses everywhere we can. So we are, Ross Painting is not going to maintain people on payroll and hope for this. We are going to apply for the loans. And I'm assuming, and we will have some, we are not closing the doors completely and locking up because, I have bookkeeping things that need to continue. I have, and I want to keep, we have a lot of bids requests for estimates coming in. So I want to keep estimating and looking for work. So when we get back to work, I'm hoping the third quarter will be kind of ramp up and get pretty good. And I'm hoping the end of the third quarter and the fourth quarter can actually be strong and get us back something close to what we were projecting to begin with. And I'm trying to make sure Ross Painting is here and has money in the bank. So I'm assuming most of the money we borrow, if we get it, will end up being a loan. Some of it will get forgiven, I believe, because we will be able to pay for our rent, we'll be able to pay for some expenses, and the payroll we keep, which was mostly office people.
Yeah, well, here's the other thing, though, I would say, Dan, is that the idea behind the stimulus package and these SBA loans that forgive you covering payroll for your employees is that they're going to lend you the money to make your employees, even if they're not working, which is a whole topic in itself that we can talk about maybe when we're done here, about like, what do you do with all those people who are on payroll, basically, who are getting paid, who are not working? Totally different question. But the whole idea is that the stimulus package intent is to get people whole in their salaries so that they are not on unemployment. Unemployment in the state of California, and I will just admit that if you're in California and you saw yesterday that the EDD changed how much they're going to pay in unemployment, but up until like 3 days ago, it was $450 a week. Well, like for most people, that's like a quarter of whatever they were making, at least here in California. So, so unemployment wasn't making people whole by any stretch of the imagination and allowing them to have enough money to live off of, which again is part of the whole purpose of the stimulus package is how does the federal government in this SBA loan program subsidize so that you can have people get paid their whole salary without having to put them on unemployment or to take them off unemployment or maybe augment with the unemployment that they are getting. I'm not exactly sure the details of that portion of it. Like, is it a split between the two? But there's a point that you're bringing up, which is, I'm not going to use up all my cash before I know that I'm really clear that I'm going to get reimbursed for that. If I borrow the money, I'm going to get it back, because I cannot afford to be paying out all this payroll for people who are not working without the assurance that I'm going to get that money. I'm going to be able to get that money from the SBA and that it will be forgiven. And I think that the point that you just made, Dan, is a super important one, which is that's not like, you want to make sure to look into all those details. Now, the thing is that this program isn't going to get finalized until Friday, right? So we got 3 days in front of us, or a couple days in front of us. And our states are changing on a day-to-day, minute-by-minute basis. So get informed right now about what's all the documentation. I have read again and again and again in terms of what this intent is and what the forgivable portion has been a consistent message since this came out on Monday. I've continually looked at it. Where the fine print is about the timing of it, and about what if you get, they get compensation for unemployment or compensation from you for actually working and billable time. That's the part that you need to like dig into and get more details on.
Yes, as I understand it, they'll the U.S. government would want us all to borrow if we. So I think it's 2.5 times your monthly payroll is what your limit is on borrowing. So whatever that is. So for Ross Painting, I think that ends up, I don't know, being something maybe close to $300,000. And they would like us to use that to keep everybody paid and use it for payroll. And then they're going to forgive everything you do with that.
That's 615,000. So if this is total payroll, then this is 2.5% of payroll total. And by the way, this payroll total is includes gross wages, employer taxes, health insurance, 401k. In some cases, when I've calculated, this includes San Francisco city tax. So you're going to have to get some more detail about some of those. It may not cover 401k, but it'll cover employer taxes. It may be that you get a credit back from employer taxes. I'm sure there's some fine details in that. But if I just take your total payroll, right, this is field and office for 8 weeks, because that's a period of time that they're talking about. If I take that total times 2.5%, that's 615,000.
Okay, well, that's better.
Yeah.
But so they would like you to use it to keep everybody employed at the end. But I think people have to be careful. They think, oh, all of this will get forgiven. You're going to need to apply for forgiveness. And I've also heard that if you borrow the money, you've increased your chances of being audited. I mean, because they want to make sure you're using it for what they want to use it for.
Right.
But I believe if you're a legitimate business doing things legitimately and you don't cover payroll, they won't be forgiven, but it will just become a loan.
Right.
For whatever those terms are that loan are.
Right. Yeah, which is a really good point, Dan, because I'm going to, one of the things that you had brought up yesterday, which I thought was a really good point, which is when we talk about next actions in here. One of them is what you just said is, how do I reduce expenses, renegotiating debt, deferring loan payments? Those are some of the things that can help you reduce that loss, reduce the amount of cash that's going out, but also, and I'm going to go back to break-even point in just a second, but, one of the other things is that you mentioned that I think was a brilliant idea, which is keep the money separate. When you get the money, know how much it is that's earmarked just for the payroll stuff. And then know how much money that you're borrowing that's actually going to be sort of, cash flow as a bridge loan to help you be gearing up, and then maybe funding the losses if you have to, or to borrow money to, like I said, bridge that startup month for June of those costs. Keep it separate and make sure to track against both of those loan amounts so that you're really clear. If I didn't use it all, I'm going to owe the difference back because I'm going to have to prove that I paid out that payroll, right? So in terms of the forgivable portion, and on the other portion, you like, nobody wants to go into debt, right? So like being very mindful of how I'm spending that money. Don't go, don't just look at it like I got money in my bank account now, I can go buy that, car that I really needed, or that piece of equipment. Like, do I really need it? And let there be just a mindfulness about how you're using that money, because I think that's critically important. And I really appreciated that you said that, because because we can't just put it in our bank accounts and like then go, oh, it's all going to be okay. Keep it, maybe even set up separate bank accounts or savings accounts that you transfer out of as you're using the stimulus money for the intent it was given, especially the portion that you're assuming is forgivable, because you want to make sure that you can document and verify that you actually paid out employees, you paid payroll, and it was not, billable time. It was above and beyond maybe what they got for unemployment or whatever. Again, I don't know the fine details of that. You'll want to find that out as you're applying for it.
My fear is that, I think you definitely have to segregate that money. So if they come in and audit you or take a look at it, it's easy to show that you used it properly and didn't misuse it and go buy a boat or something. I have a feeling that there could be some real serious penalties if people try to work the system and misuse it.
Yeah. Yep. Well, there is. I actually, I think I saw a number yesterday of 250,000. Yeah. So one other thing, and then I want to open it up for questions. One of the things you and I talked about yesterday, Dan, too, was identifying your break-even point. I love that Dan asked me this question. When we looked at his numbers and looked at what his total overhead cost is, again, just based on how it is now, the total that he would have to bill just to break even with this overhead cost is 197,000, this 196. How did I get to that number? I took his total costs, right? So there's total expenses for running overhead plus other expenses. So this has nothing to do with field or production costs. This is just what's the amount that he has to bill. So then I took that total of that 65,000 and I divided it by his gross profit margin. So if you divide it by that percentage, that will tell you how much, for you, Dan, that was how much you have to bill just to come out zero on the bottom line. So why is that an important number? Well, it's a super important number as you're gearing up. And as Dan said, it's like, you want it, don't like take your foot off of the gas right now. Like I love what you're talking about, Dan, of just like staying connected with your prospects, keep bidding, keep in connection with your customers, make sure that people know that as soon as you can remobilize, you're going to remobilize. And when you know what this number is, part of you just wants to go, okay, when I'm at capacity to be able to cover my overhead so I'm not losing any money, I want to know what that number is. I want to know that at minimum I need to have 197,000 for you, Dan, 197,000. But whatever that number is for your company as you're listening, calculate that number. It's an important number to know. Yeah, I think that was it on that. So we talked about, and also knowing your backlog number, super helpful. Again, numbers are the thing that give us clarity. Clarity gives us confidence. Confidence lets us take more powerful actions. I think you're seeing in here is that this ability, like part of, what Dan and I did with his stuff yesterday and today, and it's like looking at these numbers. He even said to me this morning before we hopped on this call, he goes like, I'm just clearer now. I understand how, what my options are, where my moves are, what do I need to borrow? Even just knowing this number of how much is in backlog, like that can give you huge peace of mind to go, okay, how much do I have in signed work? What are those, how do I keep those people engaged and make sure that I'm going to continue to do that work? So all of that I think can be super important. So I'm going to stop sharing my screen. And I am going to take questions. And Dorothy, I see lots of stuff in the chat. Do you want to let us know what questions are coming up?
Yes, we have several. Okay, so starting at the beginning, we have, you did share that you were going to share the handouts. Is that correct?
Yes.
A couple people asked. Okay, great. On step 3, Cody asked if you could, he wanted to know, Cody wanted to know, is it collectible as milestones that would not be collectible if the work stops? Let me reread that. Is it collectible as milestones that would no longer be collectible if work stops?
If you build it, all right. So when we look at accounts receivable and what's outstanding in accounts receivable, we are assuming that that is work that has been completed and earned. If you have money outstanding in receivables, let's say if you, like I had a client last year when we first started working together who had, what he did at the beginning of a job is he showed the entire contract value in accounts receivable. Not a good way to keep your accounts receivable because you're not getting an accurate picture of the financial status of your business, the financial health of your business. What you want to have in receivables is just to reflect what you've earned. And so if there is an amount that you have in there that you have not earned for a milestone that's in the future, then yes, Cody, you would deduct that from that number.
Okay, great. Catherine would like to know, with respect to the working and billable part, if we have employees who are still billable, in parentheses, doing essential repairs, etc., will that portion of their wages not be covered? Are they going to ask us to split that amount of hourly billings at some point?
I believe so, Catherine. I am not positive. You saw on the example with Dan that that's what we did. We pulled that number out and went, okay, well, if there is some amount working, we'll assume that they're only going to reimburse us for the people who are not working. So you'll need to read the fine detail, but logic just tells me if you're paying them and they're working, you're not going to get reimbursed for them again, because you already got paid for them doing the work. That's just my logical brain, but again, you're going to need to, look at the fine detail.
It's been mentioned to me that they won't allow double dipping.
Yeah, kind of logic, right? Yeah. Okay, what else?
So Paul would like to know, will it be forgiven or can you apply for it to be forgiven? This is Paul's concern.
Yeah, I think that it's, as Dan said, you have to apply for it to be forgiven.
Okay. Diane asked, would he keep paying his employees if there's no work, or would he lay them off so they would collect unemployment until he calls them back to work?
Well, this is part of what we've been talking about, is the whole idea of the stimulus package is that you're not like what did everybody do here in California? Everybody that I talked to 2 weeks ago laid their employees off, and they had them go file for unemployment. The whole idea is that with unemployment, people are not getting anywhere close to their salaries or wages that they were making when they were working. And the whole intent behind the stimulus program is to get people so that they are whole in their compensation for how much they're getting as wages every month. And so if they're not working, you're still working to get them whole with the stimulus package and make them whole in terms of the wages that they're getting. And as I said before, I don't know how this works if it's, my understanding is they want them off unemployment. That's my understanding. The states cannot bear the brunt of this. So what they want is they want people off unemployment, and you cannot take them, and this is what we were talking about before, you can't take them off unemployment and start paying them until you know that you've got the money. So which is why I'm doing this today. We're having this conversation now, because as soon as you can actually file on Friday or Saturday, whenever that is, when the SBA goes, yep, we're ready to take your loan request for this forgivable portion, that I wanted you to be armed with this information so that you're applying for the right amount. So until you get the money, you may need to, Dan and I talked about this earlier, you're going to probably need to leave them on unemployment.
Okay, thank you. Okay, so this one's a little bit longer. Catherine shared that I have a feeling that the two main loans being offered by the SBA are being conflated a bit here. The one with the payroll forgiveness is a much simpler calculation. I have the application and the SBA FAQ sheet if you want me to share them, and they did share. I can send that over with your review, Vicki. So she said that you don't get to choose the loan amount. They tell you what it is based on payroll reports. And the EIDL loan, on the other hand, you can request a certain amount, but the loan doesn't have forgiveness statutes, and it isn't for 8 weeks of payroll necessarily. So that was just some information to be shared.
Thanks. Yep. Read the fine print.
That's right. Okay, Cynthia asked, is there any existing cash deposits from signed and projected work?
Dan, do you so that's a good point. So we said that 50,000 would be convertible to cash because it assumed that there was no deposit taken, but it could be that some of the cash that you have is a prepayment against that 50 or 60,000. So the question is any of that 50 or 60,000 that you're looking at as income for April and May, has any of that been prepaid as a deposit?
I think we have one client who paid us like
in advance.
Yeah, I think we have one client who paid us $3,000, and she was going to do her project 3 months ago, and for her own problems, she hasn't started it, and we just told her we'd do it whenever we can and she's ready. So.
Okay. So it's a fairly small amount for you, but I don't remember who asked that question, but that's a great question. That's a really good point, is that if you have some of your customers' money, that when we're taking that net cash potential into account, we want to understand that we're not going to collect that again because we've already collected it if somebody's paid a deposit. So yeah, good point.
And that was Cynthia, by the way.
Okay, thanks, Cynthia.
So Suzanne asked, is paying for the insurances that a company has, auto, liability, workers' comp, going to be forgiven since it is an expense for the company?
Well, the payroll is the expense for the company also. So workers' comp, liability, all that. Your liability is generally based on your income or your wages. And I know in California, predominantly, it's all based on income anymore. And in workers' comp, my understanding is that your workers' comp still completely applies. Dan, you told me this yesterday. BBSI said workers' comp completely applies to these wages, even though people are not working. So that's part of what you want to file for forgiveness for.
Okay. Suzanne also asked, which is a more viable option for payroll, the Payroll Protection Program or the SBA loan?
I do not have the answer to that question for you. Sorry.
No worries. Just relaying what we got. Sorry, Suzanne. Okay, so Diane shared that regarding the unemployment numbers, the Fed is paying an additional $600 per week, and she shared it's the CARES Act, and quoted from an NPR article that this bill adds $600 per week from the federal government on top of whatever base amount a worker receives from the state for unemployment. That boosted payment will last for 4 months. So thanks, Diane, for sharing that.
Yep, thanks.
Paul asked if, do you know if the PPP will cover an office worker that is an independent, for example, a 1099 and or labor from an outside labor service like People Ready? We have a worker from People Ready full-time for over 6 months, and they also shared the application for that. So I have that file as well.
Great. Yes, I was going to say there's a provision for independent contractors within this whole stimulus package. So you just have to look at that.
Okay.
And they would apply for that themselves, by the way. So you're not going to pay them and apply for reimbursement. They would have to apply for themselves. So just to be clear, because they're not an employee of yours.
Vicki, my understanding is owners and everybody is eligible. So
yes. Everybody is eligible, but it's like who apply, like you're not going to pay for an independent contractor as an employer or as a business owner, you're not going to pay for an independent contractor. They would have to apply for themselves.
Okay, Cody pointed out that the total already includes 2 months, not just one, from the spreadsheet. F28 and 29 is for 8 weeks. I was sharing that because they made mention of it.
Yep, it is for 2 months. Yep.
Okay, and then Sandy wanted to know about subcontractors, which you just shared. I'm going to read the rest of the question that it says, how do they factor in our company subs out works, but they're not employees? And then Cody shared in the chat, subcontractors are technically separate business owners and would need to do their own companies to apply for the loans. The SBA the forgiveness only covers W-4 employees. Do you have anything else to add to that, Vicki?
No, I think that's just what I just said. Yeah. Yep.
Okay. And then Ken asked, and I think this is the last question, I'll pop back over to Facebook and make sure there aren't any other questions there. Ken asked, I think I understand the shorter term cash flow and financial planning. So planning for the worst case, how do you recommend that we adjust our finances if we go to May 1st and the predictions are the same or worse, meaning it may continue for another month or longer?
Ken, what I would say is kind of what we were talking about a little bit ago, which is look at your expenses, look at how you can reduce your expenses, defer costs, defer maybe some of those loan payments. I know I've talked to a couple people this week who have already started having those conversations with their lenders, and really look to tap into the amount of this package that will let you borrow on a reimbursable, like on a forgiveness basis, right? For things like rent, utilities. And when you look at your profit and loss statement, I mean, really that's where your biggest expense is in those things. And if you're an employee of your business, then you're part of that salary number too. There is a cap of 100,000, so you're not going to get compensated more than that. You're not going to get the forgivable part will not cover more than 100,000. And in terms of, if you're a sole proprietor and your paycheck is the net profits, there is a program in there for making sure that you have an ability to get support in this process as well. Again, I don't have all of the specific details on it, but what I would say is get clear on your numbers. Like, look at what it's costing you to run your business. Look at where you can cut your costs and defer costs or defer cash outflows like on loan payments and so on and so forth. And then look at the portion of this package that is applicable to you depending on the structure of your business. If you're a sole proprietor, a corporation, a partnership, it specifies different avenues to be able to tap into these resources for you.
Sorry, Cody asked if does the owner include his salary, which you just answered in the overhead. So the answer to that was yes. And then Terry asked, is owner pay covered in the loan as guaranteed payments to partners?
Again, there's a provision for, look at the details of it because it depends on the legal structure of your business. If you're a partnership, if you're an LLC, if you're a corporation, a sole proprietor. So there's different programs for those things. The one thing I do know, if you're a 20% or less partner, you are not qualified to get the payroll portion of your salary as forgiven amount. I did read that yesterday, but you'll want to look at the program within there. It does speak to each of those scenarios though.
Okay. And then Paul asked, what about the labor service? I asked if there was a follow-up to that, like if there was more to it, but that might be specific enough.
In terms of labor ready?
That was just the question. What about the labor service? And I haven't gotten a response back. Paul, if you could let us know the rest of that question. Kevin did share, if anyone has a current SBA loan, check with your lender about SBA cover P&I payments. He checked with his lender yesterday, and the SBA for them is automatically paying P&I for 6 months, not a deferment.
Yeah, nice. That's great. That's really good to know.
Mm-hmm.
Anything else?
No, that looks like it. Oh, yes, in terms of people ready labor is what Paul said.
Okay. All right. If there's no other questions, I think I'm going to finish. Dan, thank you. I really appreciate you being willing to be so generous and courageous in letting me and us like look at your information and go through this and hash this through with you, and to be willing to share and your numbers and information in a way that let other people get value from this. So thank you so much. Really appreciate it. And for everybody who's here, thanks for attending today. I will, for anybody who registered for the meeting itself, the webinar itself, I will be sending out a follow-up email with some handouts of the stuff that I talked about. If you're watching on Facebook Live and you didn't register, you are welcome to send me an email, and I'm happy to share that information with you. My team and I will get that out to you. I'm gonna post this up on my webpage. I'm also gonna share this in an email, like I said, follow-up. And I'm gonna keep doing these probably once a week over the next couple of weeks, as just like different kinds of ways to be able to support you in navigating your way through this and having a greater sense of clarity and confidence, so that you can take the most powerful actions in the midst of these rather uncertain and unknowing times. So keep the faith. We will all get through this together. I totally know that. And I know that you are all super smart and resourceful people. And you have the ability, and we have the ability to navigate our way to the other side of this. I truly believe that there's something, and I know this maybe sound weird, but like I think that there's something good that's going to come out of this. I'm already starting to hear a lot of that. So in the midst of what is really some hugely sad time, in hearing a lot of deaths, and then in the challenges that we're facing, I think that when we come together and we support each other, and we keep communicating with our teams and communicating with our clients, and that we will get to the other side of this, and we'll be better on the other side of it as human beings. So keep the faith, stay healthy, and I will see you next time. Thanks for being here today. And again, thank you, Dan.
Thank you, guys. Good luck, everybody.
We'll see you next time.